If you have ever wanted to make consistent income from the stock market, even when prices move sideways or fall, option trading might just be your missing piece. A few years ago, options were something only professionals traded, but in 2025, anyone can start, even with just a few $1,000s, and just use options safely to build predictable income every month. In this video, I'll walk you through everything you need to know to start option trading step by step. We will cover what options are, how they work, which strategies are safest for beginners, and how you can get started today, even if you have never traded before. So let's begin your option trading journey in 2025. Let's start with the basic. What exactly are options? Options are contracts. They give you the right but not the obligation to buy or sell a stock at a specific price before a specific date. There are two main types of option, a call option and a put option. A call option gives you the right to buy a stock at a fixed price. A put option gives you the right to sell a stock at a fixed price. Let's use a simple example. Imagine Tesla is trading at 250. You buy a call option that allows you to buy Tesla at 250 anytime within the next 30 days. If Tesla goes up to 270, your call option increases in value because you have the right to buy Tesla cheaper than the current price. Now, if you buy a put option, it works the other way. You have the right to sell Tesla at 250 even if the market price drop lower, say to 230. That means the put option gains value as the stock falls. So, in short, call benefit if the stock goes up, put benefit if the stock goes down. But here's the thing, beginners shouldn't start by buying options, but options decay in value over time, and most buyers actually lose money. Instead, the real power comes when you learn how to sell options and collect income upfront just like an insurance company. So, why trade options in the first place? Because options can do three powerful things for your portfolio. First, generate income. When you sell options, you receive cash immediately, called a premium. Think of it like earning rental on your stocks every single month. Second, buy stocks cheaper. With strategy like cash secure put, you can get paid to wait for a stock to fall to your ideal buy price. Third, protect your portfolio. Options can act as insurance. If the market drops, put can offset losses on your stocks. In other words, options are not gambling tools. They are income tools. They help you control risk, improve your returns, and buy or sell stocks at the prices you choose. But the best part is, once you understand the basic, you can apply this strategy again and again to build consistent monthly cash flow. Now that you understand what options are, let's talk about two safest and most beginner friendly strategy, which is cash secure put and covered call. Let's start with cash secure put. Imagine there's a stock you love, say Apple, currently trading at 245, and you would like to buy it at 230. But instead of waiting, you can sell a put option with a strike price of 230. And here is what it will happen. Someone pays you a premium, let's say $200, to agree to buy Apple at 230 if it drops there within the next month. Two outcomes are possible. The first scenario, if Apple stay above 230, you will get to keep the 200 premium and the trade expire worthless. Second scenario, if Apple drop below 230, you buy the stocks but you still keep the $200. So either way, you win. You are either paid to wait or you get to buy the stock you wanted at a discount. Now, let's move to covered call. This strategy works if you already own 100 shares of a company, let's say Tesla. You can sell a call option at a higher strike price, say 430, and receive $300 in premium. So if Tesla stay below 430, the call expire worthless and you keep both your shares and the premium. If Tesla rises above 430, you will sell your shares for profit and you still keep the premium. This is one of the safest and most consistent way to generate income from stocks you already own. In simple terms, cash secured put equal to getting paid to buy stocks. Covered call equals to getting paid to hold the stocks. These two strategies are the foundation of income-based option trading. They are low risk, repeatable, and perfect for building cash flow, even if the market moves sideways. Alright, let's talk about how to actually start trading option in 2025. Step 1. Choose a brokerage account. You will need a brokerage that support options. In Singapore, some of the most popular choices are Mumu, Interactive Broker, and Tiger Broker. All of them offer option trading across the US market like the Nasdaq and S&P 500. I do have referral link to each of these brokerage account. You can press on the link on the description box below. Step 2. Apply for option approval. When you open your account, you will be asked a few questions about your trading experience and financial knowledge. For most beginners, you will want to apply for level 1 or level 2 approval that allows you to sell covered call and cash secure put. Step 3. Learn to read an option chain. This is where you will find all the available strike price, expiration date, and premium. For example, if you see an option labeled Apple 180 put, expire 30 days, premium $2, that means you will receive $2 per share or $200 in total for agreeing to buy Apple at 180 within 30 days. Step 4. Start small. You don't need a massive portfolio. Start with one contract that will be 100 shares and use stocks you are comfortable owning long term. Typically, $2,000 to $5,000 is a good starting range for beginner. Step 5. Practice first. Both Mumu and Interactive Broker offer paper trading. That means you can stimulate trading in real market condition without using real money. This helps you build confidence and understand how option prices move over time. Once you have practiced enough, you can start live trading with small positions, slow and steady. Now, before you start trading real money, let's talk about the risk management. Option trading is powerful, but only if you respect the risk. Here are my golden rules. Rule number 1. Only sell options on stocks you actually want to own. Don't trade random ticker just for high premium. Focus on strong companies like Apple, Microsoft, or ETF like SPY and QQQ. Rule number 2. Always have enough cash or shares to cover your position. That is what makes them covered or cash secured. Never trade naked options as a beginner. Rule number 3. Avoid trading around earning weeks. Stock prices can move 10% overnight, which add unnecessary risk. Choose stable, predictable periods. Rule number 4. Track your trades and review your results. Record your strike price, premium collected, and expiration date. Over time, you will see which strategy works best for you. The key is consistency, not gambling. Even a 1% return per month compound to more than 12% per year, and that is without relying on market direction. Here is an example of how you can track your option portfolio. I've included a sample option trading tracking sheet in the description below. Feel free to download it and use it for yourself. Inside this tracker, you will find columns for the date, stock, strategy, quantity, strike price, expiration date, credit, which is the premium you will receive, along with fees, buyback price, if you choose to close the trade early, profit, and the collateral needed to open each position. Let me walk you through a quick example. Let's say you are trading Google using a cash secure put. You sell one contract with a strike price of 235 and you receive a premium of 535. The option expires on 14 November, which is about 28 days away. This contract has a delta of 0.27, meaning there's roughly a 27% chance that the option will get assigned. In other words, that you will end up buying 100 shares of Google at 235 each. Since one contract represents 100 shares, your collateral for this trade will be 23,500. That means you need to have 23,500 in cash available in your account to secure this trade. And that is why it's called a cash secure put. Now, from this one trade, you are collecting 535 in premium. That is roughly a 2% return for the month based on 23,500 collateral. If you analyze it, that will be 24% return per year just from selling safe cash secure put on quality companies you already believe in. And this is why it gets powerful. Imagine repeating this same strategy over and over again across multiple stocks with a bigger portfolio. Your monthly income starts stacking, your returns compound, and over time, your net worth grows exponentially. And that is the real beauty of option trading. It's consistent, repeatable, and scalable. So that is the complete beginner guide to option trading in 2025. You have learned what options are, why they are powerful, and the safest way to get started. Remember, option trading isn't about getting rich overnight. It's about generating consistent income, managing your risk, and building financial freedom one trade at a time. If you find this guide helpful, make sure to like this video, subscribe, and check out my other videos where I share real option trades, portfolio update, and weekly market analysis. Thanks for watching, and I will see you in the next one.